Hello, everybody. Welcome to Helping Chloe session 5. We've taken a little bit of a break while I've been over here in Vanuatu. Last session was maybe 3 weeks ago, I think, wasn't it? So I've had a fair amount going on with daily power hour kicking off and such. We've been trading live 1 hour a day every day for the month of November, but we are back. That was the other reason. I smashed my camera when we did our London meetup, but I've got a new camera now. So wanted to make sure everything's looking crisp and quality for our Helping Chloe series. Chloe, how has your trading been going? I'm sure people are dying to hear of how your journey's been going these last couple of weeks while we have been apart. Give us some update. Where are you at? We've finished the month today as of recording or as of going live. It's the 6th of November. So we've now closed out October. I did have a brief chat with Chloe before kicking off today, and I understand you've done your advanced self-review. You've reviewed your metrics for the month. We're going to be going through that a little bit today, and then hearing more about your goals, your journey, your and what it is that you're pursuing with trading. So it's a good follow-up to the previous 4 sessions. Anybody who's watching this recording or who's here live attending, if you haven't gone through the first 4 parts of Helping Chloe, I highly recommend that you do, because we've had some absolute nuggets of wisdom that you've shared. Thank you for your ongoing participation, Chloe. Give us a rundown. Where are you at? How's the last couple of weeks gone with your life, trading, and everything in between?
Yeah, it's gone well. It's definitely been a lot better. Like I've seen a big improvement. I feel like I can see I had my positive May and June, and then no, and then August and September were a bit. September was a bit of a reevaluation time. But I'm definitely like seeing the benefits now. So for October, I was up about 3.5%, 3.41 risk reward. So I was really happy with that. And that was only over 8 trades. So it was like a 75% strike rate, which I'm happy with that. I think my plan before was about 14 trades a month, but there just wasn't more that I wanted to take. So I'm kind of like expecting that frequency to just stay there. So with my actual performance, I'm really happy. I've also I felt like doing this has been really good. And then when I had to sort of reevaluate in September, I was like, right, no, like the whole reset, re-engage. And I was like, I'm going to get 12 months of fully like performance back tested and tagged back tested data. And I've been doing that, I think has like really helped my actual day-to-day trading, because it's like every day for a couple of hours, it's like I am trading live when you're doing the performance back testing. Um, and just like going through the charts and like being really strict with that has made me feel a bit more confident in that as well. So I'm feeling pretty positive.
Good stuff. Yeah, that backtesting makes a big difference, right? It's really where you isolate that saying that we've got, right? It's do what works best majority of the time, every time. Where the backtesting comes in is where you're figuring out, piecing together the pieces of the puzzle to determine what is it that actually works best majority of the time. Because trading is all comprised of doing, yeah, well, more often than not, statements, as we covered on the weekly roundtable just earlier, is figure out what works best. More often than not, X is going to play out. There's no strategy that has a 100% strike rate, but you're figuring out, and that's what determines a profitable edge. And when you've got 100 or 1,000 back-tested trades worth of that are very similar, that have the same critical criteria, whatever they are for you, or positive or negative supporting confluence factors, then you can really isolate. When you can isolate what works best majority of the time, it's actually showing up to the charts, and executing on that becomes a lot more straightforward. You're just trading what you see, not what you think. You just This trade that is about to present, that I'm about to place an entry on, does this meet, or would this have made it into that last 1,000 trades worth of, or 100, 300 trades worth of back-tested data that I've collected over the last 12 months? Because when you got evidence of 12 months of data of, okay, every trade is unique in its own way, right? There is no two identical market conditions or two identical setups. But when you've got those key critical criteria with whatever tagged positive and negative confluence factors that you've gone through gathering, it makes it so much easier because you've done it 1,000 times before to show up and just do what you've already done in the backtested data. Are you finding that's kind of your situation?
Yeah, 100%. Like I have had a week off because of the way I think I spoke about this last time, but the way I've structured it is I was like had really like intense do it all on the charts, write out all my tags on the charts. Don't do trading vault because I feel like that slows me down and messes up my thinking and gets ruins my focus. Like I can do that when I'm just doing data entry and I've got music on and I'm not thinking about it, but just doing that. So the last week has now been like the data entry tagging time. And I'm already feeling like, oh, I want to get back to back testing like I was because it got to the point where it felt like when I was then looking like at the charts in the morning
Mhm.
live, it felt like I was just, I don't know, like I was just like trying to paint on what I've done on back testing onto this live chart. Like I knew, I felt like it wasn't like, oh, is this or this? It was like, oh no, you do this, you just do this. It's just this chart's moving slightly, but it's like the same thing. You're just putting exactly what you had on the back testing charts onto this live chart. It's the exact same thing. And it felt like it was good. So yeah, I'm hoping to finish this bit of data and then get right back into doing that because that's like day to day. I just felt so much better and more comfortable trading.
Hmm. Hmm. Great question. We actually had a really good, oh, a great point. We had a great question come through now from Niels. He asks, what were you reevaluating exactly? So you might have asked, or what were you, or why were you? I guess could also be.
Okay, so I started hip snatchers in May with the last daily power hour. I think that was like the first time I did it. And then I also did trend chasers, and then I think June I realized, right, no, what hip snatchers the one for me right now. I'm just gonna focus on that. And I had in my head a simple sort of a simple strategy was I had them all in three elements. If two were epic and one was solid, no, if all had to be minimum solid but one had to be epic. And I had those rules and they worked well for a while and then they stopped working. And I think the reason for that is like what I noticed with the trend chaser as well, like me and myself, is if I like give myself strict rules like that, then like the want like desire to trade comes through because then you're like, oh, that's epic. And so and I think my rules actually like loosened. And then August and September, I see my performance sort of drop because I gave myself kind of simple criteria. So I just realized that like, okay, it was going well, but actually I'm definitely not good enough like to do this consistently. There's something missing. So it was kind of like a stop and reevaluate like my strategy, my knowledge, my plan. And I did that with like it took me weeks to do like really deep ASR on every pip snatcher I'd taken and try and find patterns. Um, and then yeah, the sort of the back testing and I reworked my plan a bit. So yeah, that's why I sort of reviewed.
Good stuff. And the why is often there's a if you have a series of or a bad run, there's more to I was going to expand on Neil's. Sorry, I'm kind of butchering your question, mate. I hope that kind of answers your question. But the why do we actually reevaluate? If you're on there's times to backtest and reevaluate, as he put it here. We call ASR is what Chloe used the term there is advanced self review. It's always wise to go and evaluate and review your performance, right? Whether you go in there to review how well you execute on your trading plan. That's one variant or variation of backtesting. And the other is how well did your trading plan perform? Those are two very different things. How well did your trading plan perform and how well did you execute on that trading plan? That's really all you should be paying attention to. Not so much how well did I perform, right? It's because that is a two-step process. Is how well did the trading plan perform? How well did I execute on the trading plan? Because when you're trading and when you figured out, when you're super crystal clear about what to do in a certain situation, again, you know what works best majority of the time. That's the first thing that you need to figure out. And then the other part is just to execute on it, to do that every single time and just let its profitable edge play out. Those are two separate statements that you need to be able to quantify both. And if your trading plan, so I guess I'm not sure if this is exactly the process that you've been going through, Chloe, but that's how I do my advanced self review, and that's how I encourage people to do that. Did you get the chance to go through and look at your two negative months? You said it was August and September, right? Did you see what your performance would have been had you followed your current trading plan precisely, perfectly?
Um,
Or is it still yet to come? Maybe you
I
haven't.
think it was like a couple off. No, I'm sure I do, but I've got my OneNote where I did it because I remember that was September when I finished the like review part.
Mhm.
But I think it was just bad trades were coming through, but I can't remember the figures. I could maybe find them.
Yeah, that's okay. Would you like to pull up your trading vault? I'd love to see your performance from October. So this is the primary thing. Like, we started it was the beginning of October, I think, is when we started doing these sessions, right? Was it a bit before? It must have been a bit before. It must have been August, mid-August, I think, because we've already done four. Then we had a couple of weeks off. So curious to see how, see the evidence of if these have been helpful. You said that they already have. That, oh yeah, I always see your wallpaper there. I'm like, man, I gotta spruce up my wallpaper.
What
Um,
screen can you see? Can you see Trading
we
View
can
and
see
Google?
everything right now. We can see your desktop wallpaper. We can see Google Chrome at the top, Trading View, desktop two. Um,
So you can see this screen here,
yeah, the, the pretty
not this
woodland
screen.
house with the fireplace.
Okay, I've got two screens and one is super messy, so I'm hoping
Right.
you can see Trading Vault now.
Yeah, exactly right.
Okay, great.
So you said the first thing that you kind of popped out to me, you only took 8 trades, which is less than what you typically take, right?
Yeah.
We're going to bring up all the months. I'd like to see the yeah, they've mixed up Trading Vault a little bit, right? So it's I'm still kind of navigating, getting used to it myself. I haven't had a good since the update, a good chance to go through. The layout's changed a bit.
Yeah.
Yeah. So this is your run of months here. So we had yeah, right. So I remember, right. So just to get everybody up to speed as well. So we had January -8. We're looking at the reward risk, and then you can allocate the percentage risk on each one. So January 24 -8, February -4.93, March -5.86, April -7.84. These are not good results, but these are novice beginner results. You started trading with us around about that time, beginning of the year, right? And it's not uncommon. Like that's you come through, you take in trades, you're learning as you go, and you're taking losses. Like that's just how it goes. Now we did have daily power hour in May, so that's what we're currently running now in November, and that was even though it was still a negative or unfavorable result, it was the best result that you've had up until that point by a long shot.
Yeah.
0.96. That was monster increase. The average or the median, I'd say, over the past 4 months was like -5.5, maybe -6, down to -1. That is a drastic increase. That's also fantastic. So it's good to see that daily power hour was of help. And then I guess you applied the things that you learned from daily power hour. You jumped straight into June and you did your first 5% month or 5 RR, right? That's 5.17. If you position sized accurately, you had an account balance that was of, where the lot sizing could be precise. You would have got 5.17 or thereabouts percent return. That would have been your first 5% month. Amazing, good stuff. And then you got 1.25, which was a dip, which is a drop from June. So May's improvement from your median result was 5% better if we're at kind of -6 prior to that on average, went to -1. That's 5%. Following month, you're actually in June, you're actually 6% better than the previous month. July, even though a positive month, you're down 3.5 or three, almost 4% down on July. What do you think started happening there? And then after that, we had August, which was down another 6%. So July and August, why were they? I mean, July, I mean, we can see that as a green month, but why was it so bad compared to June? And why was August so bad compared to July? What do you think with that?
I think but partly I got a little lucky in June. And like I had a plan, but there were just things missing. Like there was things which should invalidate a trade
Hmm.
that I wasn't like following.
Hmm.
And there weren't those trades sort of coming up. So it was okay. But then as July and August came, I guess there was more trades where actually I just needed more knowledge to know not to trade
Hmm.
certain things. And I think, yeah, so it was just like, I think a gap in knowledge and just like, okay, so my plan worked. It was a good base of a plan, but actually there's these holes in it.
Mm,
And then those holes sort of started to show in
mm,
July and August. Um,
mm,
I think like it was a little bit me, but like a little bit sort of making poor decisions, but I think it was just more of like actual holes in the plan.
mhm. Good stuff. And then we had August, which, oh, sorry, then we had September, which was a minor improvement on August. But would you say it was still the same thing? You still had some holes in the plan, I guess, is to summarize it.
Yeah, well, I only took 4 trades. So I just
Okay. Oh, I
September,
see.
because September was my like, it was like pause and really review. So I was putting a lot of time into like at that point, I hadn't rewritten my plan. Like I knew there was a problem, but I hadn't worked out even like the first part of where it is by like doing
Mhm.
ASR. Like the next part is where it is the back testing, which I'm doing now. But I hadn't even worked out the first part. So I was like a very, very cautious trader and focusing on that.
Mhm.
And I only took 4 trades and 3 were losers. So
Yeah.
it
Four
wasn't.
trades isn't a sufficient amount. Maybe you can have you can trade your trading plan perfectly and still have if you only take four trades, three losses, one win. Like that's inconclusive data. If we I didn't realize. So if you hover over this, then if we go over to January and see, I'd like to see trade by trade. So 49 trades. That's not uncommon for a novice trader in the first month. And then the next one, so February 20. Okay, March 21. Cool. April 19. Okay, pretty stable. 24, still pretty stable. June 20, yep, the same. Nice. 18, okay. August 14, right. And then I see, okay, September, we didn't really take much. And then October was a solid month, 6 winners, 2 losses. And that was by design, that was by intention. Taking on average about half or a little less than half of what you're, I mean, if we're excluding January, you are up 20 or thereabouts most months. Now you're down to 8. And you said that is it fair to say that you've taken the same, or your trading plan is similar, but you're just finding more exclusions to trades that are, I think you mentioned it briefly before, is that you said that as you've gotten more advanced or your skills have sharpened, you know what uh, red flags to look out for that can exclude trades. There's a very common trend that I see. But I don't mean to put words in your mouth or anything, but as you become more and more an advanced trader, and I see this so commonly with all students in Pro Trader and other traders that I've learned from or that I learned together with my own trading, you tend to take less trades and it's everything still meets those critical criteria, but you end up just finding things that are like, it's not, I'm not confident enough to put my money on this trade. Whereas when you're a novice, you're like, I don't know if it's a good trade or a bad trade, but it meets all the box, it ticks a few boxes, so I'm going to take it. And you can trade profitably that way, but to get to really your next level of trading, typically I find that it's about removing the poor quality trades. That's what increases your result. Is that fair to say? Again, I'm not putting words in your mouth, but is that kind of a similar
Yeah,
experience that you've gone through? Yeah.
yeah. And I think the big thing is like in terms of volume, I think it's like also this was trend chaser, like Jan until April were just trend chasers.
Right.
And then pip snatchers, there is less volume. So I feel like that sort of came in about here. And
Mhm.
then you can see it's just been a sort of decline of a
Yeah.
couple of trades a month so since. So
That's good. So this is where we've got quite a few strategies in Pro Trader, right? And by taking on more strategies, you often don't end up trading more, right, than 49 trades. Like you could be trading all Pro Trader strategies and you're rarely going to get 49 trades in a month, which you had in January. But it's that you can be even more particular. You can, when you're looking for talent in the markets for certain setups, you go and find the ones that meet more like using the right tool for the right job, let's say, right? Different market conditions, rather than trying to impose your belief by forcing a pip snatcher onto one where the market, like the daily, is just choppy or it's consolidating. You go and find a strategy like maybe the trend chaser is not so relevant on what the daily time frame is doing. It could be consolidating a lot. Now you're going to play around with the trend chaser for that month or those weeks during periods of consolidation. Whereas if the only strategy you have in your belt is say the pip snatcher, and you're sitting on your hands for 2 or 3 weeks taking no trades, it's a very difficult thing to do. You find yourself end up taking mediocre or subpar trades just because you're taking the best of a bad bunch, which oftentimes is still just a bad trade. But it's hard to see that when you're surrounded by junk. You end up just taking something that's like, well, it's not filthy junk, but it's only a little bit junk, so I'm going to take that one. Versus you're better off using the right tool for the right job. So common question I get is, which strategy should I learn? Or, do I need to learn all of them? Do I need to go through Ultimate and Micro Time Frame Mastery and Playbook? And it's like, well, you'll have more tools that during different market conditions you can end up applying and just still taking high quality trades. Because there's always high quality trades available in the markets, but there's not always high quality pip snatches. There's not always high quality CBOs. There's not always high quality power trends or reversals. Quite often the ones that, if somebody's swing trading, just going through power trends and reversals, the next thing is to go this you can have these long periods where there are no swing trades available because the markets move slow, and if we're in multiple weeks of just choppy market conditions when no criteria are met. But if you go into day trading, you're going to have a higher frequency of more opportunities of trades. So you said that you kind of took a switch here from trend chaser to pip snatcher. What was the reason for kind of moving over from the trend chaser to the pip snatcher? Also, was it just that you wanted to focus on one, or was it that you just weren't seeing the success with the trend chaser, or what exactly was it? Was there an intentional choice to do that?
Yeah, I think it was a bit of both, really. So like I had the definitely had the mindset, like the theory of just like master one, like just learn one, because each strategy is profitable. And then it felt like when I was doing the trend chaser, it felt like learning the pip snatcher felt like a cheat. It felt like the easy option, like, oh, I'm not getting results, so it must be the strategy, instead of being like, oh, I'm not getting results, so it's obviously like me, like I need to get better. So I think that's why I was slow to move on to another one, and why I have the logic of wanting to just like win at one, be like, I can do this one.
Mhm.
That's like what you say, like all you need. And it takes time to like go through the courses, do the back testing, get all these things sort of ingrained in your head. So I did like the theory of doing one, then daily power hours, like I had the 5 unprofitable months, and I was like, no, I'm sticking with it. And then I was like, okay, maybe I should put my head up and like let in another strategy.
Mhm.
And then I guess like the higher strike rate of the pip snatcher
Mhm.
and like my positive performance, and like I've just even like felt like I could see what was good, like expect what was going to happen, and then it did happen, and I just felt so much more confident, I guess, in the 1 hour chart because it's more reliable. And I was like, okay, this is like where I need to learn. This is like I need to actually learn this stuff that's not just this like the simple criteria of the trend chaser. Like I need to be able to say what's good and what's bad, and see the predict the trend on the 1 hour chart, and look out like, and I just seen that was like an area to focus on. And so there's that. And because you can see my I've I tried, I've not mastered the trend chaser. Like maybe when I come back to it in future I will. But I have not. So I'm like, right, just do the pip snatcher from, you can include hyper trades in that. Um and just get to that point. Like I don't mind making 2 or 3% a month. That's fine. If I can get to the point where I can do that consistently with a pip snatcher, then I can like grow my skill elsewhere with, more back testing and learning more. But yeah.
Hmm. Good stuff. There is a interesting discovery that we made on one of the recent sessions was your hyper trades. I think when you're, and maybe we could bring that up if you filter for the strategies, when you had hyper trade and pip snatcher, which the hyper trade is just like a premium version of the pip snatcher, which allows you to push profit targets further. We found that your hyper trades were really profitable. There we go, really solid. And that your pip snatches were not quite as profitable, right? Profit factor ratio of 2.85. That's fantastic. That's very, very, very good. Um, and I think the discovery was that, well, this is in my words, but it was, I mean, this is an observation that I made. If this was like a kind of a one-on-one coaching session, I'd say it was that your hyper trades were, they're a premium pip snatcher, So if you were to, and there's obviously there's other added confluence factors. There's the same critical criteria, but it's just got more positive confluence factors and less negative confluence factors. So secondary, not the primary ones. Uh, and that we found that you were maybe some of your pip snatches were a little bit on the soft side. So you're kind of looking at what should have been what you deemed as a hyper trade obviously could have been a hyper trade. You were taking them profitably. Um, but your pip snatches were just like subpar hyper trades. And you're like, well, it's not good enough to be a hyper trade. So I'm going to take it just as a pip snatcher instead. Whereas if you took every trade as something that is that meets all criteria as a hyper trade, whatever your positive and confluence factors were required, that what did all your hyper trades have in common? It's probably a good thing that assignment that I'd give you to do. What did they all have in common that put them over the line or the line of quality in your mind for it to be considered a hyper trade? And if you included all of those positive confluence factors that you used in your hyper trades and you applied them to your pip snatcher, and you only took pip snatchers that met those criteria, and then it's up to you if you want to actually manage it as a pip snatcher or a hyper trade. Different life situations, different conditions. If you're about to go to bed, it's better off taking a pip snatcher than it is a hyper trade because you're not going to be there to manage it. Then you might find like your results would be even much better. So what that would do is that would filter out the valid but subpar pip snatches, which could have been quite good. Did you kind of after we discovered that maybe like 3 or 4 weeks ago, was it something that you put any extra thought into, or is it something that kind of rang true at all to you?
Yeah, no, definitely. No, I did put a lot of thought into it, and I think when it came down to like what did the hyper trades have in common, it was the daily trend.
Mm.
Um, that was the I was relying like a lot on the previous candle for the DDP in pip snatchers and being like, oh, that's okay. That went down, so it's down. Whereas with hyper trends, I was like, where is price going to go? So yeah, that's like the one thing. And I have taken that in. I have taken that in into what I'm doing now. What I've noticed in myself and I need to work on is now I'm reluctant to take hyper trades. Like I think I'm like don't I think I'm just I don't know, I'm like I don't want to mess this up if I try
Mm.
to manage it. I want
Mhm.
to just get my 1-1. Because there was a few and I think last month there was one I was like that could have easily like been a hyper trade. Why didn't I do it? And it's just partly not in my mind. And I think also leaning away from it. But I think that's something I need to improve on and build.
And as you said before, it's good to master one strategy first before going into another. It is a separate strategy for that reason that even though it has the same critical criteria, there's the whole other half to the hyper trade that the pip snatcher doesn't have. It's almost like twice as much work. It's twice as much knowledge. It's twice as much skill that's applied because it's the trade management. You can trade only hyper trades and still have less of an outcome than if you're taking only pip snatches, and that comes down to poor quality trade management. Trade management is hard, man. Like that's something that is the art form. That's where everything becomes relevant. Knowing when to stay in, knowing how to manage, knowing where to trail stop loss to, and factoring all those things in. It's quite difficult. Um, but yeah, I'd say once you've got a consistent track record of profitable pip snatches, then go ahead and do your backtesting project again and see, okay, now what we've already filtered your pip snatches down by what was previously deemed a quality or quality enough for a hyper trade. You're now taking them as pip snatches, which is good. That's filtering out all the junk pip snatches. Um, so you've increased the baseline quality, I suppose is how we could call that, of your pip snatches. But now look for the creme de la creme of pip snatches and then have them as your hypers. So you're just kind of shifting everything up a level. And they do present, and spending 12 months almost now in the markets and seeing the different quality and going and doing your backtesting project, you'll start to see the subtle whispers of what is creme de la creme versus which is just cream. So if you're taking only cream pip snatches and creme de la creme hypers, then you'll do great. And then of course managing accurately. So this is the hypers right that we're showing right now.
Yeah.
Yeah, cool. And what was the month? So we'll scroll back down to the month that they were on. So you did take, I think we took one in September there, negative. It was May that pretty much carried. So it was your hypers that carried you through May, yeah.
Yeah.
And as you said, that was because the you're looking at that more. Your DDP was just better, because you were taking into account the daily trend, as well as the other things. So that's really good. So that's the confluence factor that you want to be adding into, which sounds like you already have with your pip snatches. You might also find that the reason why you're gravitating more towards, just by listening to what you've been saying and kind of feeling out the vibe, let's say, the reason why you're gravitating more towards the pip snatcher away from the trend chaser, and you did mention it earlier, is the strike rate is feels good. Like it bloody feels good when you've got green on your trade history, right? Win, win, loss. Win, win, loss. Okay, no problem. Whereas the trend chaser and hyper trades, they can both have a negative strike rate and often do have a negative strike rate, which means it's it's win, 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 or win, win, loss, 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 win, win, loss, loss, loss kind of thing. But you're still profitable. You've still got a profitable edge. But from an emotional standpoint, there can often be more resistance to that style of trading. Um, some traders find resistance to closing out only a one-to-one because they gravitate more towards higher reward risk ratio. Some are more towards higher strike rate. But if you've taken a series of 5 negative months in a row and taken, combined, that was almost 100 trades. Like their first month was what, 49 trades, almost 100 trades, 5 months in a negative. Like you've worn some losses, and losses where you're down and you're like, fuck, another one. I thought I did a good job here, and I just gone and bombed it again. And it whittles you away, man. It whittles away your soul and your spirit, and it sucks, right? And you're always going to have losses. That's just part of trading. It is and the behavioral psychologists say that the pain of a loss is about twice that of the same or equal win. So, this is why trading hard. It's like, well, it depends which element that you're looking at of it. Like technical analysis and the way that we trade, it's relatively simple. But that's the hard part of trading, is that it does suck, right? Emotionally, trading sucks. But we got to embrace the suck. And you can kind of spend some time doing what you're doing here, kind of, let's say licking your wounds by going and trading a high strike rate strategy to recoup that spirit, that soul, and to see, okay, well, now we're at 65, it's win-win loss. That's way more, that's just better. It's more comfortable than loss, loss, win, regardless of the profitability of this. So I think you've made a right choice there by going back and reviewing the pip snatcher, going back to basics. This is why we have in the ultimate curriculum, that's the first day trading strategy that you learn. Just because it's a feel good strategy, and I love the pip snatcher. It'll always hold a place in my heart because it's just such a good feel good strategy. When you're just nailing it, you feel like you're doing really, it's nurturing, it's nourishing. Is that any of that ring true to you?
Yeah. Yeah. No, 100%. Yeah, exactly. It does feel better. And I feel like, yeah, it is an easier option, but I just don't even think, I don't think it's like I could try the trend chaser profitably now. Like I think
Mm,
there's more skill to learn, like even from seeing that.
mm,
Um, but yeah, no, it does feel good. But I feel like it has a good place. But then it just sort of makes more sense when you think about doing challenges at a higher strike rate, and because they don't have a sort of end date, it seems more favored to passing challenges more consistently, at least in the start, when it's more important to start past the first few.
mm. Yeah, definitely. Prop firms like high strike rate strategies because you've got a steady growth curve, whereas daily drawdown limits and overall 10% drawdown limits, like if you're trading a negative strike rate, like a strategy let's say it's a 3-to-1 or a 4-to-1, and you only got a 30% strike rate, you can take 10 losses in a row and be doing a great job. Like you flip a coin 50-50, you can flip that 10 times and you might get 9 heads or 9 tails. It's just a random distribution. So having a positive strike rate strategy, like 55, 65, 75% strike rate that the pip snatcher is, yeah, certainly prop firms prefer that. The trend chaser and the pip snatcher, provided you've got both of them mastered, coupling them together is really good because the the high strike rate of the pip snatcher minimizes the periods of drawdown that you get from the trend chaser, which is a 50-50 or a 45% strike rate. But it's got a higher reward risk, so it still balances out your growth curve. So that's how I trade. I couple those two together, which is fantastic. We've got Niels here asking some beautifully articulated questions here. Sorry, Niels, we haven't been getting around to them. I think the first one that we did answer already. He was asking about, I think it was still the back testing before, or what maybe perhaps was why you switched. But was it because of the extra confluence factors that you looked extra good, that looked extra good, like you mentioned, which could have caused you to overlook the core factors? Yeah, I think we covered that one. That was with your trading plan and why your results improved. I believe that was the one. He's got a few other questions here. He can say he can totally relate to that, what you're saying, Chloe, about mastering one strategy before moving to the next. For me, sometimes I can shoot myself in the foot because I wait too long, maybe because I set the bar of what mastered looks like too high. Yeah, that certainly could be the case. I really, and it keeps coming back to the same thing. Do what works best majority of the time, every time. But really getting very darn transparent, crystal clear of knowing what works best majority of the time. Right? I get this feedback every single daily power hour when I run this event. People say how cool, calm, and composed I am when I place a trade. And it's like, and basically reading between the lines, they're like, "Are you not worried about the outcome?" Is kind of how I hear that question. You're not worried about the outcome of this trade? And it's like, well, no. And even when I take a win, I don't really celebrate the win. When I take a loss, I don't really mourn the loss. It's because when I've probably taken tens of thousands of trades now, that I know what works best majority of the time, and I know a very large minority of the time the trade is going to be unfavorable, right? I already know that. I'm already prepared for that. But it's that law of large numbers, and it's not even something that like you can really logic your way through. You can use logic to remind yourself of this. Emotionally, you're still going to have that response, but over time, I don't know what it is. It does just kind of diminish. I mean, I prefer to take wins, and I prefer to like, oh, great, I passed that prop firm challenge. Um, you know, I have a preference. Of course, we all have preferences, but I've just done it so many times that I know without a doubt what works best majority of the time. And when you've done the back testing, you've done your back testing, you've gone and seen hundreds or thousands of samples of trades, and you're like, yep, that one meets criteria, that one doesn't, that one does, this one doesn't. And you've got a clear framework of which box of valid or invalid or, quality or not quality setup is presenting. When one clearly falls into box A and doesn't fall into box B, well, you act accordingly. Falls into box B, I'm not going to take that trade. That trade, the trade you didn't take that goes on, hits profit target, you don't even get an emotional response to that. Because like, well, that was a box B trade. That was a B that was just subpar. Yeah, hit profit target. But I know majority of the time, because I've got data to prove it, that if I were to indulge in that style or that type of trade or whatever the blueprint, the thumbprint of that trade was, it's going to be a negative outcome. Then you're totally cool. You can wear that with a badge of honor to say, I'm glad I didn't take the trade because it didn't meet it fell into my definition of box B versus box A.
That's something, yeah, that's something I've noticed like a lot more. Like I feel nothing from missing a trade. Like
Mhm.
I'm like, no, like no, like I just know if it's no, if it wins, I'm just like I feel like I used to feel and now I feel nothing. Like I describe it as like I was vegan for like a year or 2 years ages ago. And like when I was in the supermarket, it would just be like non-food. Like I just seen that as like not food. It wasn't like being vegan was hard. It wasn't like I was like, oh, I wish I could eat that. I just seen that like vegan stuff was food and everything else was like not food. So it wasn't even an option. And that's what I feel like I'm getting to that point now. When I see that, it's like that's not a trade. Like it's not like, oh, but is it? It's like, no, that's not a trade. And I can kind of move past it, which is quite nice.
That's a great way to look at it. If for those who are omnivores, it's like walking down the dog food aisle. You're not like, fuck, I wish I could eat some of that dog food, right? It's just not food. It doesn't cross anyone's mind, right? Yeah. Oh, that's a great analogy. That's really interesting. Cool. We've got a few other questions coming in here. Dan says, I agree, very, very early days for me, but I'm planning to go with the pip snatcher until I have a good hit rate, then move to hyper and trend chaser. Great choice, Dan. Neil says that was pretty much exactly how my previous trading experience was low win rate but great reward risk. Yeah, there's a few strategies that are coming out that I'm seeing online. So they're shooting for like 10-to-1 reward risk ratios. And I tell you what, they make for bloody good Instagram content. If you're trying to sell a trading course, yeah, boy, just got this 10-to-1 because you don't see the losses, right? But it's a negative, it's hugely negative strike rate. You know, if it's 20% hit rate, even if you're getting 10-to-1, it's a profitable strategy. So I'm not slagging the strategy off. It certainly could be profitable. And if that's the way you like to trade, go for it. It is, it's like walking around with a dark cloud over your head all the time, though. When you're losing 7 or 8 to make one win that pays off all your losses, and that win, like, it's not the way that I want to trade, and it's certainly not the way that prop firms will support that. They don't condone that style of trading because they want to see slow, steady growth curves, and you're just going to be hitting drawdowns and such, and they will be closing your account out. So they're not really congruent with prop firms. So maybe if you've got a couple of mil in your account and you want to trade that way, go for it. But if you're like the rest of us that might only have a couple of 100K or less, and prop firms are the avenue that you're going down, then yeah, stick with something with a higher strike rate. Prop firms certainly prefer that. Um, right. I think it was much harder for me. This Niels continues to say, I think it was much harder for me that way. Looking forward to a higher win rate strategy mentally. Yeah, for sure. And Jade's had to dip out. Thanks for learning so much. Cool. All right. Chloe, back to you then. Thank you everybody for your questions. We'll check back on questions in the next in 10 minutes or so. Feel free to keep tapping them away. Thank you everybody for your beautifully articulated questions. So this is, if you scroll over to the right here, let's see your total annual performance of your hypers. So 5.55 RR, right? And this is even through May and August and September. So these were the what you considered the cream of pip snatches. That's pretty much what a hyper trade is. This was your definition of that, which is why you took it as a hyper trade. And your profit factor ratio was 2.85, I think, was it? A bit further up. Yeah, 2.85. So for anybody who's unaware, 1.8 profit factor ratio is pretty good. That's now you're starting to get to the point of like, right, you're making money, you're doing well there. Anything over, so 2, consistently 2 and above, that's professional level. That's professional grade. You can quit your job off that. You can replace your income, so on. So the profit factor ratio is kind of what we're just talking about. It's the relationship between strike rate versus reward risk ratio. So as we're saying, you can have a 20% strike rate with a 10-to-1 reward risk ratio. That's a positive profit factor ratio, meaning it's more than 1. Or you could have a 75% strike rate and a 1-to-1. So for every 1 that you win, you make 1%. Every 1 that you lose 1%. But your strike rate, you're winning more than you lose. Both of those to get a positive profit factor ratio, and you can have so many different variants and styles of that. But the profit factor ratio is what is the most important here. 2.85, that's excellent, right? Any like 2 plus is professional grade. 2.5, you're getting very good. As you approximate 3, that's like world class level. And granted, you've only got a small sample of trades here. You got 7 trades on this, but this is really, 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 really good, right? Granted, 4 wins, 3 losses. Maybe you'll take 2 or 3, 5 losses. Like you really need a sample of maybe 50 trades or more to get a very clear profit factor ratio. So, Chloe, just by looking at this, I wouldn't be saying, well, maybe you are, but I wouldn't be assuming that you're world class just yet. We've got maybe a little bit of work to do before we get.
No, definitely not.
Give me 100 trades to show me a 2.85. I'm not saying shit. What's your bank account? I want to transfer you some money for you to trade for me as well. Diversify my capital. I'll hire you as part of the Pro Trader team, and the Pro Trader prop firm that we're considering setting up. Right, so that's that one. If we want to have a look at the pip snatches just in comparison, we'll weight these more towards recent trades because, of course, you'll have probably bucket loads earlier in the year. So see, here we go to 0.77. That means that of all time, of all pip snatches that you've taken, they've had a negative profit factor ratio. So I see that you took some there in the beginning in December as well.
There we go. It didn't look quite right. This is the actual numbers. So
okay. What was the other thing that you had?
I think it just sometimes it's got a bit of a glitch where it just selects them all, even though one's selected, so you have to unselect it. So this is the actual.
So this is incredibly reassuring. Well, not reassuring, but this is what we've uncovered here. Your hyper trade plus pip snatcher equals positive profit factor ratio. Now we don't know exactly how much, but we could explore that. Because your pip snatchers here of all pip snatches that you've logged, at least, or taken of all time, at least logged here accurately, you break even on the pip snatcher, but you are profitable on the hyper. So there's no negative variance. So if you combined, because they have the same critical criteria, remember the pip snatcher and the hyper trade. If you took the same pip snatches, hyper trades, however you took them, because I'd assume as well that your hyper trades, if you only had a 1% profit target on them rather than pushing it up to 4%, they would have gone on and hit the 1%. Um, you're already trading profitably. So you're already in of every trade. In how many trades? We've got 69 here. We had seven of this. So you got 76 trades on the book, 76 trades logged and profitable, even with the trades from earlier, probably that weren't as good. Like you're already trading profitably. That's epic news. That's really, really good. So scroll down to the months and we can see how this was kind of weighted. Um, Yep. So here we go. So we had May. That was during a daily power hour. That was the good month that you had. That was this. Oh no, that was the -1% month. We can see it
Yeah.
was -4. So it was the pip snatches that were bringing you down there. June was a monster. Okay, so you had negative. So the June you finished on about 5%, right? 5.15 or something like that. Um,
Yeah.
and that was maybe it was the
Trend chasers.
trend chasers that were bringing you down there, was it? Yeah, it was.
It was.
Because you're positive on the hypers, positive on the pip snatches. See, looking at this data, you've made a fantastic choice with removing trend chasers and focusing on what your strengths are. Your strengths are pip snatcher and hyper trade. This is really good stuff here. Okay, July, positive month. August was quite catastrophic on the pip snatcher front. I wonder why that was. Um, did we take any hypers during then?
I didn't take any hypers.
Right. So I reckon this is my hypothesis. We could explore this further. Is that yeah, there's this inverse correlation of when you take pip snatches and hypers. The more pip snatches you take, the lower your results going to be. Or like in a particular month, like pre having this conversation or these sessions, because if you took very little or no hypers, that means there weren't any cream pip snatches. Because your cream pip snatches you probably took as a hyper, which probably just met a high quality. Remember, cream pip snatchers should just be pip snatchers. Creme de la creme pip snatchers should be hypers. But before, it didn't even meet, and this is you previously trading the cream pip snatchers you were taking as hypers, not as pip snatchers. So the fact that you didn't take any hypers, I'd assume that pretty much the 13 trades that you did take that month were probably just junk pip snatchers. Um,
Yeah,
if
that's
that's
right.
yeah, yeah, cool. All right, good. Well, I hope that this is I don't know if this logic that I'm using, all this terminology is actually making sense. It's making sense in my head. I hope it's making sense in yours. Um, and then likewise, following month, inconclusive with a slim amount of trades, and then October, yeah. So with the work that you're doing now, with the back testing and the advanced self review, if you take anything from that, from the work that you've done. You've sounds like you've already uncovered some discoveries from the research that you've been doing, tweaked, refined your trading plan, found out a little bit more what works majority of the time. Um, if you take anything at all from that and you incorporate that into your current trading, you're already with the hyper trade plus pip snatch already profitable. If we combine those two, that is only going to take your profit to improve to be even better, which is exactly where you want to be, obviously. If you could toggle on both hypers and pip snatches now, and then we have a look at your total combined profit factor ratio. Maybe if we look at it from yeah, we'll do that, and then we'll filter from June only. So scroll up to the top. Yeah, so 5.85 RR. We scroll up to we'll check the profit factor ratio first, and then we'll filter out and weight it more towards recent. So 1.18. So you are profitable. It's not enough, right? So we want to get that to kind of 1.8. But if you were to just do June onwards, so that was post daily power hour, everything that you learned in daily power hour applied.
I think it, oh no, the
Because
same.
there was that yeah, do you
Yeah,
need to
it's
put
not,
in the final date? Like, do you need to put in today's date? I'm not actually too sure. See if
I
it
don't
makes.
know. I think it's just one of those things where it just is the same. Because I think that these
Okay.
changed. Do you think these changed?
Okay. Oh, they did. Okay, good. Well, then that's the same. Um, that's surprising. What? Because May was oh no, that's a -1. Yeah, so it was only a slightly negative month. Right. So the improvements will hopefully start showing up over. This is the thing. Trading has got this. Well, it's like anything in life. You do the work, and then the results come months and sometimes years later, right? You start a business, you work really hard, nothing happens, you don't make any money, and then a year later, the work that you did a year earlier starts happening. So I'm Chloe, I'm invested in your journey. I want to see what you end this quarter on and what you do. Q1 of 2025, I reckon is probably going to be a solid month if you or a solid quarter, provided you keep going on this trajectory. If we
Yeah.
scroll down, now that we've filtered that out, if we go have a look at the months again, we'll see. Yeah, so October was good, August was bad. Why did we uncover that August was not so good again? What was the
Just the mistakes and the things missing from my plan.
mhm,
My plan wasn't. It was first iteration of hip snatcher plan, which worked well, but
mhm,
didn't actually hold up and needed to be tightened up.
mhm. Right. So really, November and December are going to be the ones that they are the missing slates that I'd like to feel, like to see here. Right. So key takeaways then, because we are wrapping up. We had a few other little topics of discussion that we were going to cover, but I think we're not really going to have time to cover them. What's your intention then for to kind of summarize the session, summarize your findings, summarize your from the back testing and the journey thus far, almost 12 months. Well, it was December, I think, was your first logged trades of 2023, right?
Mhm.
So we've got 2 more months. What's your intention for this quarter? Do you have any goals for performance or for result? And what are some kind of reminders that uh, that you could have for yourself? Or for anybody else who's obviously on this trading journey, what are things that you'd like to your intentions?
What I really want is I want 3 positive months in a row. That's my goal. But I'm not mad like that's what I really want. But I want to just have like on an average 70% strike rate. I'm not like that invested in I want 5%, I want 7%, I want 3% because I feel like what I've learned is like having that then makes you look for trades because you're trying to like get to a number. Whereas if there's not trades, like I think even in October, I'm not sure if I think it was maybe the 15th or something before I placed my first trade. Like the first 2 weeks, I was just like, there was nothing. So I think it's just yeah, a 70% strike rate, ideally,
Hmm.
a lot less trades, but 3 positive months in a row in terms of performance. Um, and I've started, but not technically placed my first trade, a prop firm challenge, which is now this is my like I've had the reset phase. Now I have daily power hour. Now I'm deep into back testing. I've got a new plan, start a prop firm challenge. So hopefully by December past that, but we'll see.
Hmm. Good stuff. Good key takeaways. I like it. And you're not going to be where do we stand with the hyper trades then? Because if you're focusing, and this is why having intentions is important. If you want to get to a 70% strike rate, naturally the strike rate of a hyper trade tends to be a little bit lower. Well, just because you're pushing profit targets a little bit further. Um, Depending how you manage them, though. Look, if you're at a hyper trade and you manage aggressively as it reaches the 1%, if you're like, okay, I'm either gonna, if this starts staggering here at the 1%, I'm just gonna revert it back to a pip snatcher and kill it. But if it blasts through that profit target, then we can let it run. So, are you gonna keep hyper trades on the books and kind of manage them aggressively, or are you gonna just remove hyper trades completely?
I'm gonna keep them in.
Mhm.
I'm gonna keep them in. But I'm like aware I'm really cautious to take them, so I feel like there will be very few that do come in. But I'm gonna keep aware of them because there's even things with like with news like managing being like, all right, close that because it's a pip snatcher, but some it's like, well, that I don't know. I just think I need to keep doing them and try and like I think they're part of this plan, and I need to be aware of them and trade them when I can. And yeah, work out what my like management kind of looks like. And I probably think being more aggressive as it gets to that 1%, and as it's past that 1%, being okay with it just being a 1%, even though it could have been a hyper trade, as long as I get that 1%, and kind of having that approach to management. But yeah.
Mm-hmm. Good stuff. Good intentions. Right. Thank you, everybody, for attending Helping Chloe, session 5. Everybody showed up live. Good stuff. Did you have any final key takeaways, or that was pretty much all you'd like to share? Cool. I think next week I'd love to hear more about what your intentions are behind trading, kind of bigger picture stuff as our final session. Where it is that you're going, what is the mark that you wanted to leave on this planet, if anything. Right. There's no obligation with that as trading, but as traders, all that we're really doing is just moving numbers around on a screen. And to make, we're not saving the manatees, we're literally not contributing in any way, shape, or form. It's a very kind of narcissistic endeavor, I'd say, is what trading is. But when you can couple that with something that you're doing with those additional resources, whether it being extra time, extra money that you are generating from trading, how if at all, it's, again, as I say, no obligation. What's the journey that you're going on? So you can have a think about that for next week anyway. But anybody who wants to tune in to hear Chloe's vision. We've kind of talked it up a little bit. It's like no pressure. She's like, man, I just want to have a veggie garden and play with my dog or whatever. Like that's also cool. That was pretty much my vision when I first started trading as well. So it's a noble thing, right? There's certainly nothing wrong with that at all. So there's no obligation. But I'd like to hear more about Chloe and what what your goals and intentions are next week. That's what we were going to cover today, but alas, we have run out of time. Thank you, everybody, for showing up live. And yeah, see you all next week, same time, same place. Thank you so much, Chloe, as always, for your ongoing contributions to the Pro Trader community. Cheers. Chat soon.
Thank you. Bye.
No.